Hi, this is Zach Mayer with the US Chartbreakers here at Zach's Traders Cafe for Tuesday, the 27th of February. Starting off with the S&P, which has been gapping up and down, but at the moment we're backing off from the top of that rising trend channel from October 5160, the nominal target for the top of this gargantuan rally that we've had since, around the 4100 mark, and on the downside 4980. The risk, if we break back below that, then the rather painful conclusion could be that we're headed down to the 50-day moving average area in 4860, the low back at the end of January. But at the moment we're hoping this market will remain within the channel 4980 to 5160, and if it's really lucky we'll stay above 5060, which it was the initial high there earlier in the month, and hopefully would become new support. Moving on to the Nasdaq, which is obviously AI related at the moment, and here the situation is that we remain within this rising formation. Top of that formation currently heading towards 18,400. The floor of the channel there 17,500, and if we have a sort of a worst case scenario at the moment, 17,200, the 50-day moving average, and also the that late January support, so analogous to what we're seeing on the S&P at the moment. But that uptrend line there, or resistance line projection there from September, 18,400 is still the area to shoot for, especially after the massive gap to the upside that we had last week. Onto the stocks and a few familiar names, starting off with this current situation at Altice. Here, after lots of waving around, we've seen this market bounce basically off the December support, or just above it. Nice end of day close above a rising 50-day line around 2.47. We want to see this market stay above that 50-day line, and then maybe head up to as high as $4 at the top of that broadening triangle from September, as soon as the end of next month. Moving on to another potential winner, Agiliti, and here you can see that we're sort of flatlining either side of the 50-day moving average, but the good news in the recent past is that we've stayed above that uptrend line there from back at the beginning of November. That's around the $7.20 level, and what we're really looking for here is a break of $7.90, which would be the top of that symmetrical triangle to take us up as high as $10 by the end of next month. So a reasonable risk reward here if you believe that $7.20 will hold, and you believe also in that rebound off neutral 50 in the RSI window, which in fact we've had two of those, which should be a leading indicator on the upside. Only time will tell. Moving along to an old favorite of the Chartbreakers, which is Cleanspark. Here you can see that we've hit our previous target there of $20. Above $20, we're looking for 28, which is the upper parallel of that rising trend channel from back in October, and we're looking for that to be hit by the end of next month. Ideally, we stay on the right side of $19, which was the early February resistance for this market. Going on to a stock which may be slightly puzzling to some. Here you'll see Datasea, and here the trade could be after that spike towards $20 that we are looking for support to come in at neckline, old neckline resistance. That was around the $4.20 mark, and ideally above that we'll have a rebound. So just see how far the shares can come. So far we've gone down to around $4.97, so the trade may not be on, but with the rising 50-day line and that potential gap to fill, there is still the chance of a retest of the area just towards the $4.40 mark. Less esoteric stuff coming up with the next stock, which is Foghorn, and here looks like a V-shaped bull flag breakout with the initial target here $7.65, which hopefully we will have. We're already in pre-market, already hit that target above $7.65 on an end of day close basis, looking at the upper parallel of that triangle there from back in October, as high as $10.40 by the end of next month. Ideally, we stay on the right side, obviously recent support at $6. Moving along to the situation at Krystal Biotech, and here a massive unfilled gap to the upside. The old resistance there from back in January around $132. Above that, we're looking for a resistance line projection from back in the early part of last year, or in fact the late part of 2022, currently heading towards as high as $190, and we're looking for that maybe by the end of April. But the key here is to remain above the old resistance areas in the mid 130s. Lendway is next, and here the picture is of a sudden spike and a gap fill there. I think it was gap down there at the beginning of the month, a gap fill rebound above the recent resistance around $4.90, looking for the shares to head as high as $7.60 by the end of next month. A stock which looked as though it was very promising until very recently was Microcloud hologram, and here in fact we hit not one but two targets before the shares plummeted. Now all we have now is fig leaf support from the 50-day moving average at $8.30. We're hoping that will remain in place for then a rebound back up to pre-rally support for the shares around $16. So above 8, looking for 16 there on Microcloud, but obviously a very volatile situation and not for widows and orphans. Moving on to Root, and here a third day of very, very solid gains. We've gone through our previous initial target there around $20 and above $20, looking for the upper parallel of that resistance line, the upper parallel of that rising trend channel, as high as $30 by the end of next month. But the key here, I think, is probably staying on the right side of $20 if we can. One of the summer favorites was Soundhound, and here you can probably see why we had decent price action then, but maybe even more decent now with the gap higher and then a mid-move consolidation breakout above that $4.30 level, looking for the top of the rising trend channel from the end of 2022 as high as $8, and that should happen hopefully well before the end of next month. Finishing off with Vroom, which hasn't quite lived up to its name in the recent past, but there may be something for aggressive bottom fishers on this situation, in the sense we've broken a resistance line there from the end of January. That was roughly level with the $12.50 level. Above that, we're looking for the shares to at least head back up to the $20 area, which was resistance on the way down at the end of last month. That's it for me today. More updates tomorrow.